July housing activity. That's our topic for today's Backstage Pass. Well, hey there. Stocks are a mixed bag so far today. Mortgage bonds were up this morning, but at the time of recording, which is about midday, mortgage bonds are back to flat. Mortgage rates did open a little bit better today. We'll talk more about that in just a minute, but first let's take a look at some economic data that came out today. The Philly Fed Business Index, which was a market mover last month, whenever that data was released, came out today, and the headline data was actually much better than expected. The forecast was for this number to be, the index to be in the negative, and then the actual headline data came out and the number was in the positive. So a big beat of expectations for this headline data. Also, initial jobless claims came out, and initial jobless claims came in a little bit lower than what was expected. And so those two beats on expectations for two different data points, both of those beats on those expectations were normally would have been viewed as adverse by the bond market, because it shows the economy is not still as weak as what the bond market wants to see as far as trying to just get inflation down. And so normally we would have seen an adverse reaction in the bond market, but we didn't. And the reason why is because of exactly what we talked about yesterday. Those technical levels play defense, and they play defense very well. So bonds did not move past technical levels, and they stayed within the trading range that they've been in, which is good news, because if the mortgage bond had gone through that floor of support, that floor of defense, there's a long way to go underneath that. And so thankfully that did not happen. But we'll just have to wait and see what the trend continues over the next day and into next week. We're still hoping for a breakout in the upward direction on the mortgage bond, but we'll have to see what happens. And we'll talk more in just a minute about what the mortgage bonds are doing today. In other news, in housing news, existing home sales came out for the month of July today, released by the National Association of Realtors. This measures exactly what we're talking about, closings on existing homes. And the data showed that existing home sales were down by 5.6 or 5.9% in July. That was really in line with expectations. Now, this measured activity in May and June, and we saw that peak in interest rates in the month of June, where we kind of hit that 6%, basically hit that 6% national average on the interest rate. And so it's not a surprise that July activity was down. July also activity is down year over year by about 20%. And again, we know affordability is an issue. We know that the mortgage rates and everything have kind of caused a little bit of a slowdown in the housing market. So this is kind of in line with what we've been expecting. Now, inventory did increase slightly to 1.31 million, but it is slowing down as well, which is typical for this time of year. We kind of see that crest at this time of year, and we see inventory start to slow down. Right now, there's a 3.3 months of supply of homes, which is tight. 6 months is considered balanced. But if you look at active listings, there's only 747,000 active listings. So that means out of the 1.31 million homes that are considered part of the inventory, 43% of that inventory is available, or sorry, 43% of that inventory is under contract and not truly available. Now, this speaks to demand and how much there is a high demand in the market, because in a normal market, there's about 25% under contract. So typical market, you've got about 6 months worth of supply, and you've got about 25% under contract. We're still in very high demand. And then talking about high demand, I've heard some anecdotes and people talking about how homes are staying on the market for a little bit longer, but for the homes that are priced right, they're still moving quickly. Average time on market in the month of July was 14 days. So we're still moving quite a bit, still moving fast on the homes that are priced right. Now, onto the bond market. Mortgage bonds were up this morning, but in midday trading, they moved a little bit lower. We could be seeing some negative reprice risk because of that move lower during the midday trading. Mortgage bonds are flat right now. The 10-year yield is down a couple of basis points right now, and it's held that ground since the morning open session. What that means for mortgage rates today, mortgage rates moved a little bit better. Yesterday, they were in that 5.55 to 5.65 range like we talked about. Today, we're expecting them to come in around the 5.4 to 5.45% range for the average 30-year fixed. So that's where we're at right now. But again, watching how lenders respond to that move lower in the mortgage bond. Now, that's all the news that we have for today. Remember, stay positive. I hope you have a great day, and we will see you tomorrow.